Is Nvidia right now in a dot-com bubble? Is it in a roaring 20s one? Is it the California gold rush? Which one is it? This is the question Wall Street has been asking itself for quite a while now. And in the meantime, Nvidia keeps crushing it. Right now, at the time of making this video, stock is up 13%, new all-time highs, $762 a share. Forward PE, 31 times. You might say that's quite expensive for me. Okay, fine. Even when we go to EV to sales in the next 12 months, we're at 17.2 times. Definitely not cheap if you compare it to, well, even companies during the dot-com bubble. But Nvidia is already making billions and billions in profits each and every quarter. And if you look at the analyst estimates here for the coming fiscal years, growth is expected to continue, although slower, but still top line growth here, 57%, and then another 20%, followed by a weaker fiscal year 2027. Again, until then, the numbers can be revised up or down. The same can be said here with regards to EPS. So let's go back to the analogy. Dot-com bubble, roaring 20s, California gold rush. For those who don't know, California gold rush, they discovered gold in California in the 19th century. What happened there? Who makes the most money, according to you, when something new is discovered? When a new thing happens, who makes the most money? Is it the person that discovered the new thing? Is it the person that sells that thing? Is it the merchants afterwards? Who makes the most money? Well, usually the person or the company, whatever, makes the most money is the one that sells you the basics, is the one that sells you the picks and shovels. We've talked about that before, right? Everybody talks about Nvidia, AMD, maybe sometimes even Intel. But if you go one step before, who's the kingpin there? TSMC. Without TSMC, there is no Nvidia's success, right? Zero. Without TSMC, actually, we don't have phones, laptops, you name it. Huge problem. But TSMC, they also rely on another company called ASML. They make the EUV machines. So maybe that's a better picks and shovel pick. Picks and shovel pick. You understand what I'm saying? Now, with regards to Nvidia specifically, what did we say? We talked about hardware, we talked about software. They themselves said it's not about just storing data, serving companies with that data. No, they talk about AI factories. Taking, let's say, raw materials, raw data, converting that into tokens, right, that you use in Gemini, ChatGPT, Midjourney, you name it, that transforms into useful materials. And since we're talking here about AI factories, they talked about sovereign AI. Basically, this is not just about serving one person or a company. No, this is also about countries. Countries protecting, generating, doing whatever they want with their own data in their own region. Very, very important. So right now, instead of looking for who might win here in this AI race, in this AI hype cycle, is it Midjourney, is it Hugging Face, is it this AI company, that AI company? At the end of the day, all, if not most of those companies are using a service that Nvidia provides, whether it's hardware or software, right? Software being CUDA, specialized SDKs, Omniverse, you name it. So again, picking here what is, let's say, supposed to be a picks and shovel is usually the best way forward. Of course, things like TSMC and ASML are also great because without them, there's definitely no success for Nvidia. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, for those that needed a quick reminder, this is basically what the quarter looked like. Revenue is up 265% year over year, gross margin 76%, operating income up 983%, net income is up 769%, and diluted earnings per share up 765%. Of course, like I said, I don't think we can expect these year over year comparisons to continue like that for another year. Yes, another quarter is possible, but if you think that in fiscal year 26, you're going to see these types of comparisons, I don't think that's realistic. Then with regards to outlook, revenue is expected to be $24 billion. Expectations were around $22 billion, which is what happened actually in this quarter, despite expectations being $20 to $20.5 billion. So another double beat and a raise for Nvidia. If we look at where the majority of that revenue comes from, of course, not surprising. Most of it comes from the data center, another $4 billion increase quarter over quarter. Remember, in the past, they barely generated $4 billion a quarter with regards to data center. Now they're adding $4 billion each and every quarter. Gaming is flat. That was expected. They guided for it to be a bit weak. Then the rest here continues the same trajectory, still small compared to the overall business, but I do expect these segments to become bigger over time. Now let's dive a bit deeper into the earnings call. I've picked out a couple of things that I think you should be paying attention to. First up, with regards to data center revenue growth, they estimated that in the past year, approximately 40% of data center revenue was for AI inference. Why is that? Well, if you look at what happened in the last year or so, things like Adobe Firefly, new Midjourney models, ChatGPT, Gemini, Getty, you name it, all of that has come online, improved over time, more users, and so that leads to approximately 40%, probably more, in growth for data center revenue. And remember, previously, data centers were used solely, or the majority of the time, only to store data, whether it's for you or for a specific company. Now, the use of data centers have changed a little bit. Training, storage, inference, you name it. Then they talk about the ramp of the H200s. They say here they're on track to ramp H200 with initial shipment in the second quarter. Demand is strong as H200 nearly doubles the inference performance of H100s. Then again, there is this question, so what happens with everyone that already ordered the H100? Does that make any sense to use it anymore? Well, again, there are now way more use cases for data centers. They also said that their software business now reached an annualized revenue run rate of $1 billion. And in my opinion, that's just the start. So now you're getting to a point where you understand that software is going to be extremely important for Nvidia, which is also why it gets a high multiple because, well, software margins are obviously way higher than the hardware ones. Then there was a question with regards to supply demand. So first of all, quick reminder, Nvidia Hopper GPU has 35,000 parts. So in order to build that, you need a very, very solid supply chain. In the past, supply chain weren't that, let's say, cooperative. There's always more demand than supply. So you have to wait for one supplier to bring in the goods. You cannot finish the product if you have 35,000 parts and let's say 10% of those are still in shipments, etc. But they say here, supply is improving. We expect the demand will continue to be stronger than our supply provides through the year, and we'll do our best. The cycle times are improving and we're going to continue to do our best. However, whenever we have new products such as the H200, it ramps from 0 to a very large number, and you can't do that overnight. Everything is ramped up, it doesn't step up. So this is a bit more information that we're getting here. Either they can stretch that, let's say, demand of theirs for another couple of quarters, or we're going to see some dip sometimes whenever that switch happens between, let's say, older products and newer products ramping up. But then you can maybe expect the same thing that has happened in this cycle. Then there was a question about converting backlog into revenue, with lead times for their products have come down quite a bit. So they got an answer here by Colette. Our inventory on hand, given our allocation that we're on, we're trying to, as things come into inventory, immediately work to ship them to our customers. We think our customer appreciates our ability to meet these schedules that we've looked for. I mean, you might say, okay, this is already maybe an orange flag or not, meaning that, well, they want to ship it as fast as possible. Maybe the wait times have been reduced by quite a lot because, let's say, supply has come pretty close to demand. Okay, I do still think we can trust them with regards to what they've just showed us, plus what they're guiding, but we'll see what happens in the coming quarters. The second piece here, our purchase commitment have many different components that we need for manufacturing. Some of them may be for the next 2 quarters, some of them may be for multiple years. Then last one here, the prepaids are pre-designed to make sure that we have the reserve capacity that we need at several of our manufacturing suppliers as we look forward. So far, I don't think this is really such a big warning. Lead times have come down, fine, but I do still think, yes, that demand is bigger than the supply. Last 2 things here. One was with regards to gross margin. They said that, well, they're going to go back to the mid-70s gross margin. Why is that? Well, they say that in Q4 and Q1 that included some benefit from favorable component cost in supply chain, kind of across both their compute and networking, and also in several different stages of the manufacturing process. So they say here, looking forward, they have visibility into a mid-70s gross margin for the rest of the fiscal year, taking us back to where we were before this Q4 and Q1 peak that we've had here. Again, nothing really to be scared of. Mid-70s margins still pretty high for them. And last one here is regards to China, the restrictions there, licensing, etc., etc. So of course, they directly paused their shipments towards China. We reset the product offering to China, and now we're sampling to customers in China. We're going to do our best to compete in that marketplace and succeed in that marketplace within the specifications and the restrictions. And so that's it. Last quarter, the business significantly declined as we paused in the marketplace, which was projected. It's about 20 to 25% or so. We expect this quarter to be about the same, but after that, hopefully we can compete for our business and do our best, and we see how that turns out. They of course have to protect the chips from being hacked, systems from being hacked, etc., etc. But let's see what happens. Again, right now, even without the China marketplace, they've grown quite fast. They're guiding for more growth in the next quarter as well. So let's see how that evolves. So overall, if you're buying Nvidia right now, I don't think you're buying a company that is in a dot-com bubble. I do think that you're buying a company that is sort of in a California gold rush, a company that is selling you the picks and shovels for the AI future through hardware and definitely through software as well. More competitors will enter in the market for sure. More competitors are already entering in the markets as well. The competitors are also Nvidia's customers. Don't forget that. So that will be it in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.